Last week it was retail sales, industrial production. Scott, I saw some housing data and GDP coming out later this week, but I imagine the Fed minutes will be closely watched as well.
Yeah, we'll get those tomorrow afternoon. But like you said, Ben, many traders, including myself, we're scratching our heads. And especially the move that we're seeing with the dollar and gold both moving higher together. Almost, we haven't seen that in such a long time. The safe haven trade, if you will, of both of these. So it is definitely a head scratcher. I think that what's happening is there are really some questions over what is going on with the talks with China. So I actually think what's going to be more important than the Fed minutes that we're going to get tomorrow is what's going to happen the rest of this week. Are we really going to have these quote-unquote high-level talks with China? Are they going to be put off? You hear coming out of the White House that things are progressing so well, but then you hear the opposite coming out of China, that the U.S. is not dealing in good faith, this, that, and the other. And I think that is why you're seeing, I don't want to say a run-up, but that's why you're seeing some upside pressure both in the dollar and gold right now.
Yeah, it's interesting because we were just taking a look at the indices, and that uncertainty that you just touched on, Scott, hasn't really impacted them. If anything, it seems like it's helped support or lift the dollar, as you mentioned. Scott, the last time we saw the dollar up at these levels, the Trump administration and others expressed concern. We saw it impacting emerging markets and such. What's different this time around? How come no mention of concern associated with a rising dollar as of yet?
Well, I think that the administration, the White House, they're trying to battle just too many things. There's too many things on the hot button right now. And my guess is that rhetoric, they'll get to it pretty soon right now. But with everything with China right, on the hot seat right now, and then everything else going on, I think that has kind of taken a back seat.
Scott, I'm wondering, is the disparity that we've been seeing really as extreme as the currency market suggested is? The euro's on a multi-year low. I'm wondering if it's justifiable considering the struggle that they face, or if things just kind of been overdone at this point.
I wouldn't say that it's overdone at all. I would say that, there's just so much uncertainty. Ben, the market does not like uncertainty. And with the euro, with the pound, what we're seeing with Brexit, nobody really knows what's going to happen here. And not just with Brexit, but the economic news coming out of the Eurozone is just flat out awful. It was really awful. So I think that is just weighing so heavily on that currency.
Yeah, Scott, I'm glad you brought up Brexit. I want to talk British pound. I want to talk Brexit because at the end of March, the departure date is rapidly approaching now, and Theresa May is still not getting the support and backing that she needs from either side. Scott, there were some interesting watering hole or water cooler type comments that emerged last week. One of them was the Dutch Prime Minister, who said without the EU, the UK would be a middling economy stuck in the Atlantic Ocean. And I'm wondering, as he says, is it just that, a meddling economy? I mean, why are negotiations taking so long?
No, I think that was, I don't want to get into the political side of things. That was more a flippant comment to me. The Eurozone is obviously very, very important. They're, incredibly important to international economics. That being said, this news is terrible coming out of there. The economy is not running well, but it really comes down to, Ben, is uncertainty. We don't know what's going to happen over the next 30 or 40 days, whatever it is, until Brexit is supposed to happen. Is it going to get extended? We don't know, and the market just trades like the uncertainty that is right before us.
Yeah, certainly has been, appears to be somewhat headline risk susceptible recently. I want to stick with that some of that political posturing that you mentioned or talked about. Along those same lines, we had Donald Tusk, the European Council chief, saying that I've been wondering what that special place in hell looks like for those who promoted Brexit without even a sketch of a plan on how to carry it out safely. I mean, getting back to what you said, Scott, these don't appear to be very constructive comments coming from chief negotiators with just over a month to go.
Well, that's what it is. You know, this has been going on for what, the better part of 2 years, right?
Yeah.
And now we're getting down to the nitty gritty. And my guess, and you know, I don't have a horse in the race, let's call it, but my guess is this is going to get extended because at this point there's nothing constructive, at least that we see going on. Maybe behind the scenes there's some negotiations going on, but there's nothing constructive right now. And what you're seeing in the headlines, which is all fueling this headline risk right now, really are just these comments, these off-the-cuff comments that, like you said, they're not helping anything at this point. So I think we see an extension on these negotiations here, which probably will calm down the markets a little bit, probably lift up the euro a little bit. Nonetheless, though, there is so much pressure. There are so many headwinds on that currency right now.
Yeah, it seems like in the past, any sign of an extension has helped support or lift the currency. It seems like some of those negative comments were weighing on it a bit last week, though. Scott, dollar up, but the yen isn't. I mean, well, it's not down so much as you would think. I mean, I'm wondering, why do you think we're seeing a yen still being supported even amidst indices which are rallying back? Normally you'd think that the yen would sell off with the indices rallying back.
Yeah, and that's because there's been some recent news coming out that, you know, their monetary policy may actually shift back towards an easing policy. So it's, you know, headline news day to day. I mean, I just read this morning that, you know, their economy is not doing well, right?
Yeah.
The inflation concerns there are almost off the table, and they're almost going to talk about easing rather than tightening here. So one day you get a stronger yen, one day you get, well, we're backing off a little bit. And that's what currency traders love, but the entire marketplace don't love this headline risk.
So Scott, last question. We talked a little bit about the dollar and the rally and why it was different this time in terms of the impact that it's having on emerging markets. If rates were to start to join in, do you think this would change things a little bit? I mean, imagine if we saw rates inching up with the dollar, that would put some pressure on emerging markets.
No doubt about it. And I think we're not going to see that. I think there's just, you know, we're walking a very fine line. We're walking that tightrope right now between, you know, not inflation, but between almost sagging economies internationally. But if we do start to see that tick up at all, these emerging markets, they're in for a lot of pain here.